Hi, this is Brent with another chart breakdown for our chart breakdown series at Trade Therapy. We are talking about Chevron. Chevron was our clarity spotlight last week. If you have been keeping up with Trade Therapy content all year, there should be a concern jumping off the page at you. We are looking at a long-term weekly chart here, and the concern should be obvious. If you're not reading Trade Therapy content, you should be. Had you been following it all year, you could have taken advantage of the SMCI trade today. Today is Wednesday, October 30th. If you haven't checked out our SMCI chart breakdown video, check it out. The same concern that we have with Chevron was present in SMCI, and that's this heavy upper shelf in the volume profile. It is a classic sign of distribution. Anytime we see an asset go on a big run, like we saw Chevron run from the COVID low up to the post-COVID market high here, we should be looking for signs of distribution. Signals would be these large volume spikes up at the top. These are classic signs of distribution. If we take a closer look at that, we can see these events, these Wyckoff tags that are playing out. These are, we do talk a lot about in Trade Therapy content, the challenge that institutions have in managing very large positions. They can't dump them all at once. If they do that, they'll end up pushing the price down and losing money. It is much more effective for them to exit their positions over a period of time. That there's a process that they follow to do that, and that's what creates things like a buying climax here. You can see the large volume spike is associated with climactic behavior, followed by an automatic reaction, a secondary test, and a sign of weakness in phase B right here. These are all things that are confirmations for us when we look for and try to identify when institutions are distributing or selling off their positions. And we do see that here. We've used a Fibonacci retracement here. Fibonacci levels are great targets. These are targets that institutions use to or have historically used to take profit. They're great ways to identify targets if you're holding positions to trade around. If we take our 0 and put it at the high and then take our 1 and put it at the low, that gives us all of our levels that we're going to watch out for. Anytime something makes a big run like we saw Chevron do during COVID, it is typical, or generally we can expect a 50% retracement of that run. So this 0.5 fib level at 101.74 also happens to coincide with this dotted line over here, which is the which is the point of control. That is where the institutions are holding their position. That's where the most transactions have occurred at that price. So it's not surprising to see our target for accumulation come back down to the point of control. It's also the same level that Chevron reaccumulated before it made its big run. We have covered extensively throughout the year in Trade Therapy that targets for accumulation, institutions have a tendency to accumulate positions where at the levels where reaccumulation had occurred historically. So if we take a look at, if we jump back to the today's chart and kind of take a look at the current conditions. Again, here you see the big volume profile, the big volume shelf here on top, obviously distributing. We can see the moving averages rolling over. We can see falling peaks or falling valleys. These are signs of the distribution process and the beginning of a markdown process. We see a last point of supply forming here. What that is you see these 4 candles, how they all close and open right at the same point. What that is that's institutions selling off the last part of their long trade. So when they When they get up to a level where they're ready to distribute, they can't sell it all at once. So they go through a process of luring retail traders back in to sell into. And then as they dump supply and sell their positions, that brings price back down. And then they bring it back up with very low volumes on something like a good earnings report, luring in retail traders only to turn around and dump additional supply into. So they're selling off their long position that they just made all of these profits from. And this is the last portion of their long position. Now that they have dumped the last of their long position, they are now short. That's why you see price beginning to accelerate to the downside. You see moving averages beginning to roll over. This gold moving average here is the 30-week simple moving average. We talk a lot about it in trade therapy, and that the first time that price back tests the 30-week moving average, whether it's back testing it to the upside during an accumulation or to the downside in a distribution, this is the professional's entry. There are professional money managers that do nothing but monitor 30-week simple moving averages for this back test. Once that holds, that is the indication that the markdown process is about to begin in earnest. Short positions are taken against this moving average. We did mention in Clarity in our spotlight last week that we are considering taking a short position here with a stop placed just above this moving average, both the 55-week moving average and the 30-week simple moving average. So we do expect to see this to mark down. Earnings is Friday before market open. Of course, we are heading into the presidential election as well as the FOMC meeting directly after that. So there are plenty of catalysts that can be used as excuses. That's what institutions like to do. They like to use the news to justify their movements. They can't have everybody blaming Wall Street. So we are expecting to see a markdown process begin here. Again, our targets for the downside are this reaccumulation range right here. You'll see there is also a volume shelf associated with that. The volume point of control is right in here, right around 100 on higher time frames. So we expect to see Chevron come down here and go through an accumulation process right around 100. It might shoot down below that as it gets later in the accumulation stages in setting a Wyckoff spring to take out some liquidity. So hope this video was helpful. Hope everybody got a lot out of the Clarity Spotlight on Chevron last week.